Get ready to embark on an economic journey as we unveil the heartbeats of the Rwandan business landscape. This is the Business Age, your front row seat to the economic renaissance of the land of 1,000 hills. Join us as we traverse the bustling markets of Kigali, delve into the success stories of Rwandan entrepreneurs, and explore the dynamic forces shaping the nation's economy. From the boardrooms to the street vendors, we'll bring you the voices of the visionaries and the minds behind Rwanda's economic evolution. Discover the fusion of tradition and technology, witness the agricultural innovations transforming rural communities, and explore the cutting-edge innovations propelling Rwanda into a new era of economic prosperity. From the city lights to the rural landscapes, every business is a story waiting to be told. Hello there. Thank you so much for tuning in to the Business Age. This week, we're coming to you from Washington, D.C., the heart of this year's IMF and World Bank Annual Meetings, where global leaders, policymakers, and economists gathered to discuss the world economy and what lies ahead for Africa. You'll be with me, Naingwa Fiona Mothoni.
Sub-Saharan Africa's economic growth, we now estimate, is expected to hold steady at 4.1% this year, with a modest pickup expected in 2026.
Africa, like other regions, faces impact from the new US tariffs. Curious to know the IMF policy advice that you'd have for African economies to mitigate trade war effects as well as also managing inflation.
Global trade developments continue to shape the outlook, but other drivers are increasingly coming into the picture. Our April report offered a range of estimates for the resulting growth downgrade from modest to significant. 6 months on, where are we?
Our economy in Rwanda is dynamic and is resilient. When I mean resilient to shocks.
I would say Nigeria has seen significant transformation in the last 2 years, especially in terms of policies of government that have ensured that the capacity of that economy is actually being brought to bear. A lot of reforms happening, and we see upward trajectory in terms of what we expect in Nigeria going forward.
Somalia is now becoming developed, especially on the resilience and the problems that were going on for some time, but now we are recovering. You can say a recovering country.
The global economic outlook paints a mixed picture. Slow but steady growth and persistent inflation, high interest rates, and geopolitical tensions.
Global trade developments continue to shape the outlook, but other drivers are increasingly coming into the picture. In April, the US shook global trade norms by announcing sweeping tariffs. Our April report offered a range of estimates for the resulting growth downgrade from modest to significant. 6 months on, where are we? The good news is that the growth downgrade is at the modest end of the range, with growth projected at 3.2% this year and 3.1% next year, while inflation has increased modestly and is proving more persistent.
6 months ago, our assessment highlighted the region's strong efforts and that growth had exceeded expectations last year. But we also noted sudden realignment of global priorities and increasing turbulent external conditions marked by weaker demand, softer commodity prices, and tighter financial markets. Today, these global headwinds continue to test the region's recovery and resilience. Sub-Saharan Africa's economic growth, we now estimate, is expected to hold steady at 4.1% this year, with a modest pickup expected in 2026. And in our view, this reflects ongoing progress in macroeconomic stabilization and reform efforts across the major economies in the region. Important to note that several countries in the region, Benin, Cote d'Ivoire, Ethiopia, Rwanda, Uganda are among the fastest growing economies in the world. However, we still have quite a few resource-intensive countries and conflict-infected countries continuing to face significant challenges with only modest gains in per capita incomes. The external environment remains challenging, global growth is slowing, and commodity prices are diverging. Notably, oil prices are declining while the price of copper, coffee, and gold are fairly elevated. And external financing conditions have improved somewhat, allowing a few countries, Kenya and Angola most recently, to access international capital markets. The global trade and policy landscape has also deteriorated. Tariffs on exports to the United States have increased, and preferential access under AGOA has expired, while the direct exposure of most countries to the US is limited. Broader trade policy uncertainty is weighing on growth. The projected sharp decline in foreign aid also leaves some lower income and fragile countries particularly exposed. Affected governments have sought to reallocate budgetary resources, but with limited fiscal space, they have limited room for maneuver.
Looking at Africa currently, with everything that is happening, the uncertainties around the world, what is the one thing that Africa needs?
Africa needs to develop Africa. We as a continent have the resources, have the people, and there's a lot of capacity we need to bring to bear to develop our continent. So I think in terms of investment, that's a major thing. We need to actually get our industries well developed. Currently, there's a whole lot of export of raw materials out of Africa. We need to start to see a value addition in Africa, where we not only export raw materials, but we actually produce finished goods that we don't have to import those finished goods again from the West. So a lot of it has to do with investment that will bring the production capacity of Africa to actually be able to show that, yes, we are producing what we consume as a continent, and of course be able to be that powerhouse also when it comes to trade internationally.
Yeah, and when you talk about being a powerhouse, Africa in itself has so much potential. Do you see that need particularly being addressed here at the annual meetings? And what is the one thing that you're looking out for throughout this week?
Yeah, so it's important. Look, as a financial institution that UBA is, with our presence, we've also been very much instrumental to supporting African economies, and of course in the trade finance area that you mentioned. So we want to be able to attract investment into Africa. We want to be able to see African economies actually provide the platform that ensures that the capacity within the different economies are brought to bear, and we see economies growing as a whole. So within this conference, obviously we want to see collaborations, because again, yes, there's capacity in Africa, but there's need for partnership with other institutions. So in this forum, we are able to collaborate and engage with potential investors, financial institutions, powerhouses that can enable us to be able to shorten the journey to the destination we desire for the African continent.
What is the one thing that, whether it's Somalia or even looking at the African continent, what is the one thing that they need for development, sustainable development, to actually be attained? What would it be?
Actually, Somalia is, I can describe Somalia as a virgin country, whereby we have natural resources, we have oil, which is not yet, but the government now, we are working on with development partners to at least extract the oil. And there are other so many natural resources in the country, and it's something that I can describe as a virgin country, whereby we can grow, I think, in 10 years. If we get the peace that we require, and also the development, especially infrastructure.
How would you say development would look like? What are the key things that need to be put in place for development, sustained development to happen within 10 years?
Yeah, Somalis, they're entrepreneurs. I think if you have seen, and we are young generations. Somalis, statistically, 70% of the population are young, and now that There are so many Somali diaspora in the world that are coming back to the country, investing in the country, and wherever the Somalis are, they develop business. So, like Kenya now is a neighboring country, but Somalis invested a lot in Kenya, in South Africa, in other East African countries, and a good thing now for Somalia to develop is joining the East Africa community, which we recently joined. So I think that is also one of the areas that Somalia can make trade, and we have one of the longest ocean in East Africa, long coastline in Africa, not in East Africa, in Africa. So that is the potential it has for development and economic resilience. Actually, we are like Somalia is a fragile state that is coming up from fragility to development, using the security that is now improving in the country. We are the government is trying to develop, especially with the IMF now we are working with the debt relief for the country, which we had already discussed with other countries that we owed some money, that Somalia's debt relief now is coming to an end, around 5 billion. And that means now the investment in the country and the attraction to other countries in the world is there's a lot of interest in Somalia with the developing and other countries in the world.
Back home in Rwanda, the macroeconomic picture remains resilient, with growth supported by infrastructure investments, tourism recovery, and prudent monetary policy. But what does the central bank make of these global and regional shifts?
Since April, there have been different projections published by the IMF on the global economy, and the April ones were a bit more pessimistic than what was released this week. The reason being at the time is when tariffs were announced by the US, and the tariffs were really high with China, with Europe, and with other countries. And since then, there have been negotiations between countries, and these tariffs are lower than what was announced. That's the main reason why the IMF revised their projections slightly up, showing that the global growth will be quite the same this year compared to last year, 3.2, then 3.1. So really there's no big change. So how is it affecting us? We are following what's going on globally with these international trade measures, the tariff, the impact on the global economy. And the way it affects us is very indirect, because we do not have a lot of direct trade relationship with the US. So that's one. So the way we may be affected is if these tariffs are affecting the global economy, they're affecting global supply chains, they're affecting global commodities that we are importing at the end of the day. That's what we are monitoring, but for the moment we did not see anything like that. So the conclusion is that for the moment it's not really affecting us.
Looking at the recent report, the IMF projects global growth to be at 3.2% in 2025. How does Rwanda's current growth forecast compare, and what factors would you say are sustaining Rwanda's resilience?
Yes, our economy is quite resilient since the post-COVID period. We've had very high growth. As you know, the National Institute of Statistics published the rebased GDP. Rebasing means basically taking into account what is happening in our economy in Rwanda in the numbers, and they started publishing this new series starting from the Q2. So what we noted is this year, Q2, we had 7.2% economic growth. Last year also 7.2%. The projection for this year is 7%. 2025, we expect to have a growth around 7%. In 2026 and 27, then it will increase to 7.2, 7.6. And these projections are going to be also reflected in the IMF ones, because we actually work together on that. So why, and you're asking the resilience, where is it coming from? For that, we have to understand that almost 50% of our economy is coming from services. And the main drivers there is we have, a lot of different services, but I can talk about tourism-related services performing well. In terms of balance of payment and inflows, we are now around $600 million from tourism. It's quite high compared to a few years ago. And we have, when tourism is doing well, a lot of other subsectors like travel agencies, tour operators, and everything around that is actually performing well. We have financial services. We have ICT-related services. So trade services, transport services, if around there. So all these are boosting our economy. And on the side of the industry, we have construction activities happening in Kigali and outside Kigali. Construction sector, manufacturing sector. Even in the agriculture sector, we have a very good performance of coffee export this year. So this is contributing very much to the growth we are seeing. Going forward, 26, 27, our growth will be driven by the same, but we have also big projects coming in. You know that it's construction of the new Kigali International Airport. All this is going to contribute positively to growth.
Even looking at the positive projections, we still have risks, and we're still in very unpredictable times. We're looking at tighter even lending. We're looking at the cutting down of aid. And even the report, about 20 African countries are in risk of, looking at debt distress. So, one, touch on the risks and what measures are in place for Rwanda to be able to sustain the momentum.
Yes, the global context is a bit difficult, as you said. Many advanced economies are focusing on their own issues, let me say it that way. While you have many European countries cutting the budget they give in terms of aid, and they're moving it to defense. Same for the UK. So that's why you see that what they have usually in terms of spending to support developing economies is reduced. And that's what's being discussed here in the annual meetings. Developing economies have to rely more on debt that is a bit more expensive than on grants or concessional loans. This is the general problem we are having this year and next year globally. Now, when it comes to Rwanda, the strategy has always been to be prudent in the borrowing the government is doing, prioritizing especially concessional loans. Concessional loans are those with very low interest rates and maturity of 20 to 30 years. And for the moment, because of the good performance, the good economic performance, but also the fact that those who are lending to Rwanda can see the results, then I think our country is better placed in the sense like we are still accessing concessional loans, even if the total envelope for concessional loans is reducing, if that makes sense. Because people will prioritize working with Rwanda where they can see the results of projects that are ongoing, etc. So with that, the government strategy, Ministry of Finance has been to maximize on the concessional loans, which are actually less expensive, to achieve our development needs. This is a way to go. The second part is in terms of raising our own domestic revenue. So you saw that there have been some new taxes introduced. The reason being that you can not only rely on external financing, you need to raise your own domestic revenue to support your own development needs. And we have development needs as part of our national strategy for transformation. So that's very important in the strategy. Second, and the last part is trying to, and that's on the side of fiscal, orient or have spending going to the most important aspects of the development. With that, gradually, you manage to have a sustainable fiscal path that's leading to a debt that remains sustainable in the medium term. And right now, we are one of the few countries in Africa that still considered moderate risk of debt distress. This is for these reasons, and these are the strategies that are in place. And this is continuing, and with that, despite what we are seeing globally, reduction in total aid, we believe that our growth and the development we are seeing can remain in the medium to long term.
In its regional economic outlook, the IMF highlighted that Sub-Saharan Africa's growth is expected to pick up modestly after slowing in the past 2 years due to debt vulnerabilities, high inflation, and external shocks.
The theme of our regional economic outlook for Sub-Saharan Africa is holding steady. So growth is projected to be about 4.1% this year, which is similar to what we had last year. And for next year, growth is expected to slightly increase to about 4.4%. This outcome reflects a number of is a result of a number of policy implementation, good policies implemented in various areas, especially in containing inflation and lowering fiscal deficits generally. At the same time, the outlook is also being helped by generally good commodity prices in commodities such as gold, cocoa, coffee, and so on. So overall, this economic outlook is also a reflection of a number of countries doing quite well, actually. Countries such as Cote d'Ivoire, Rwanda, Ethiopia, and so on, Benin. So overall, the situation is, as we have said in our World Economic Outlook, the economic growth is not as bad as we had feared, but not as good as it needs to be.
The report highlights tight external borrowing conditions that, and also looking at the declining aid. How are these factors reshaping the region's fiscal landscape?
So the tight borrowing conditions have led to much higher levels of interest rates or yields that countries can borrow at from international markets. And at the same time, this has also been exacerbated by a sharp reduction in the amount of aid that countries receive. And some countries are particularly vulnerable to this kind of aid reduction. Countries such as Liberia, South Sudan, Malawi, and so on have been particularly badly hit, which obviously impacts their fiscal performance and has increased their deficits.
Yeah, and with AGOA's expiry, looking at also the rising U.S. Trade tariffs, how significant is a trade shock for African exporters, and what role can regional trade play in cushioning it?
In general, the impact is not as bad as we had previously anticipated. So for the vast majority of countries, the impact will be quite manageable. In fact, overall reduction in exports is of the order of about 1% or less in most countries. That said, a certain number of countries are particularly exposed. Countries such as Lesotho, for example, are particularly exposed because they actually export quite a lot of textiles. Madagascar would also be one of the countries. So on balance, the impact is not near as bad, mostly because a large number of countries in Africa do not export a huge amount of goods to the U.S. And on top of that, although there has been an increase in overall tariffs, certain goods such as oil and and most minerals are actually exempt, so they are not being as badly impacted by the reduction in, by the increase in tariffs.
And when you're looking at even the data that has been released, about 20 African countries are now at high risk of, or are some to an extent, some of them are in debt distress. How concerned is the IMF about the rising bank sovereign excess that has been highlighted?
So what we have seen over time is that with the reduction in aid and reduction in international international financing overall, countries have had greater recourse to the domestic financial system, and that means that progressively the level of access of governments to the domestic financial system is rising, and therefore banks are increasingly exposed to sovereign risk. And if governments are having problems in servicing their debt, that can potentially undermine the financial stability of banks.
Yeah, and looking at the shift towards even domestic financing, it seems to ease foreign exchange pressures, but it's increasing on local borrowing costs. How can governments balance this trade-off?
Yeah, so in general, improving access to domestic financial markets is a good thing, because it does reduce the risk of the exchange rate depreciating. If you are borrowing, for example, in US dollars and your currency has depreciated, you would obviously you would have to pay a lot more. While if you are borrowing domestically, that risk is obviously reduced. On the other hand, in general, domestic borrowing in domestic currency can have problems, or can cause problems, because on average the interest rates paid on those on that level of borrowing is usually higher than you would get from international sources, and on top of that, it can also lead to crowding out of the domestic private sector.
Yeah, and we've seen inflation has eased within the region, also within some countries, but still remains in double digits in some economies. How should central banks really navigate the balance between inflation control and debt sustainability?
Yeah, so the median level of inflation in the region has gone down quite substantially over the past year or so. Excuse me. Since the pandemic, due to significant tightening of monetary policy, but countries still need those countries that have still high levels of inflation, double-digit inflation, as you refer to it. There's about 1/5 of the countries still need to address this challenge, mostly by reducing excessive recourse of the government to monetary financing, for instance, and more generally tightening monetary policy and anchoring expectations.
Yeah, and lastly, if you were to summarize one message from this regional economic outlook to African policymakers, what will it be?
The key message that we want African policymakers to take from this regional outlook is that they need to enhance resilience, resilience to be able to recover from frequent shocks that the region and the global economy is facing. And this can be done by improving domestic revenue mobilization, better managing the public financial financial resources, and crucially, improving debt transparency and overall debt management. This will allow countries to be better able to finance their economies and address the long-term economic challenges in order to have more inclusive and robust growth.
The message is clear. While global headwinds persist, Africa's economic future depends on sound domestic policy, regional cooperation, and access to sustainable finance.